Good afternoon, my name is Janet Barraza and I will be presenting Target's executive summary for the first quarter of their fiscal year 2013. First quarter earnings were below expectations as a result of sales in seasonal and weather-related categories. The company opened its first 24 Canadian stores in the first quarter as part of its plan to open 124 stores in Canada by the end of the year. In the first quarter, Target returned $779 million to shareholders through dividends and share repurchase. Target Corporation reported first quarter net earnings of $198 million or 77 cents per share, which includes losses related to the early retirement of debt of 41 cents per share, earnings per share dilution related to the Canadian segment of 24 cents, and net accounting gains of 36 cents associated with the sale of Target's entire consumer credit card receivables portfolio to TD Bank Group. Adjusted earnings per share, a measure the company believes is useful in providing period-to-period comparisons of the results of its U.S. operations, were $1.05 in the first quarter of 2013, down 5% from $1.11 in 2012. Target's first quarter earnings were below expectations as a result of softer than expected sales, particularly in apparel and other seasonal and weather-sensitive categories, said Craig Steinhoffel, Chairman, President, and CEO of Target Corporation. While we are disappointed in our first quarter performance, we remain confident in our strategy and we continue to invest in initiatives including Canada, our digital channels, and City Target that will drive Target's long-term growth. Fiscal 2013 earnings guidance. In second quarter 2013, the company expects adjusted earnings per share of $1.09 to $1.19 and reported, or as they say, generally accepted accounting principles earnings per share of 90 cents to $1. The difference between the adjusted and the reported earnings per share ranges reflects expected dilution of approximately 16 cents related to the Canadian operations and 3 cents related to expected reduction in the beneficial interest asset recorded on the sale of our credit card portfolio. For full year 2013, the company now expects adjusted earnings per share of $4.70 to $4.90 compared with prior guidance of $4.85 to $5.05. The reported earnings per share is expected to be $4.12 to $4.32, approximately 58 cents lower than the adjusted earnings per share. U.S. segment results. In first quarter of 2013, sales increased 5% to $16.6 billion from $16.5 billion last year, reflecting a 0.6% decline in comparable store sales combined with the contribution from new stores. Segment earnings before interest, expense, and income taxes were $1,239 million in the first quarter of 2013, a decrease of 7.5% from $1,340 million in 2012. First quarter earnings before interest, expense, and income taxes margin rate was 7.5%, compared with 8.1% in the revised U.S. segment and 7.3% in the historical U.S. retail segment in first quarter of 2012. First quarter gross margin rate increased to 30.7% in 2013 from 30.2% in 2012, reflecting category rate improvements combined with a 0.2 percentage point benefit from changes to the company's vendor agreements, partially offset by the impact of the company's integrated growth strategies. First quarter selling, general, administrative expense rate was 20.3% in 2013 compared with 2012 rates of 19% in the revised U.S. segment and 19.9% in the historical U.S. retail segment. Compared with the U.S. segment in the first quarter 2012, the selling, general, administrative expense rate increase was primarily driven by a smaller benefit from credit card income, including the impact of profit sharing with TD Bank, and an increase in technology investments. In addition, the change in Target's vendor agreements increased first quarter 2013 selling, general, and administrative rate by approximately 0.2 percentage profits, offsetting the equivalent benefit to the gross margin rate. Canadian segment results. Target opened its first 24 Canadian stores in March of 2013, which generated sales of $86 million in the first quarter with a gross margin rate of 38.4%. The earnings before interest, expense, and income taxes for the first quarter was $205 million, as gross margin of $33 million was offset by $238 million in startup expenses, operating expenses, depreciation, and amortization related to the company's market entry. Canadian operations reduced Target's reported earnings per share by 24 cents in the first quarter of 2013. This amount includes interest expense and tax expense that are not included in the segment measure of profit. Interest expense and taxes. Net interest expense increased to $629 million in first quarter of 2013 compared with $184 million in first quarter of 2012 due to a $449 million charge related to the early retirement of debt. The company's effective income tax rate was 36% in the first quarter compared with 36.7% in first quarter of 2012. Capital return to shareholders. In first quarter of 2013, the company repurchased approximately 8.5 million shares of its company stock at an average price of $64.04 for a total investment of $547 million. The company also paid dividends of $232 million during the first quarter. This concludes my executive summary for Target's first quarter in the fiscal year 2013. Thank you.